All right, welcome. This video is going to be about trend lines. Trend lines are quite important because they are another area of support and resistance. We have horizontal trend lines, which look like this. Let me just put this right here. Look like this. And let me change that color as well. Okay, right. And then we have vertical trend lines that look like this. Now, a lot of people want to know what is the proper way to place your trend line, and it varies. Sometimes people use the wicks, and then some people use the actual close of the candle. Okay, and the reason why people use the actual close of the candle or close of price is because these wicks here on different brokers, you may have different sizes of wicks, may even have different candles, but the price that is closed, it will be the same for all brokers. So that's a little bit more accurate. I personally, especially with harmonics, you will need to be using the wick. Why? It's because price has attempted to come into that area. There was a level of rejection and then it fell. And usually what happens, just like human beings, whenever we fail at something, we always try to go back to succeed. And so that's what price does. It actually comes back into that area. And you can see over here, you see the wick, this long wick. This at one time was a strong bullish candle. It was rejected by the sellers and came down. But as you can see, sometime later, price came back into this and was able to push through, which is what they were trying to do over here, but there was rejection, but they had gained enough accumulation of liquidity in the market and they was able to push through. Okay, so that's what the difference is. If you notice sometimes why people use wicks and some people use the actual candle body. And then some people use a range because in the the forex market, nothing is exactly accurate. It's more of a range. So let's say we have these wicks right here. Let me just make this a little bit for you guys. Okay, so you see all these wicks here. The difference is some people use a range because they want the level of resistance to touch all of the candles. So they'll put it not quite at the top or all the way at the top, but where it touches all of the candles. So there's various ways in which you can use and place your trend line. Again, it's just a range. It's just something to alert you that when price gets here, price has reacted in this area. In this particular instance, it is reacting. This is a level of resistance, and you see the price came down, but again, was able to break through over here. So it came down, retested, came down again, and then made a higher low and broke through. Okay, so that's the differences of trend lines and how they're placed. You'll see them different, like I said, when you look at other people's charts and so forth. Now, like I said, as far as harmonics are concerned, how I personally use my trend lines, I do use the wicks, and it's a simple 1-2 run it through method. And so I would find, let's say this wick right here. Find the bottom of the wick, 1, 2, run it through. There we go. And there's my trend line. Okay, so anything above this trend line is a buy. I'm not taking any sales because everything that, as long as price stays above here, I'm in a buy. As soon as price breaks the trend line, comes down, and then does something what we all know, the retest. That's retesting and then comes down. Now all of my trades should be sells. At this point, it's just not as simple as it's a sell because it's below the trend line, but that is the basic major principle in understanding how trend lines work. Okay, so again, anything above a buy, anything below a sell. It's very simple. The trend lines helps give you a directional bias in reference to what trend you're in. So as you can see, price has started here, has come, and it's respecting the trend line. It respected it here. And you need at least 2 or 3 taps, 2 the minimum, in order for a trend line to actually be valid. And so because we have 1, we have 2 here, it is a valid trend line. So price comes back here, you will again be looking for a buy unless you see some type of break and a retest. And just like a horizontal level of support and resistance, a horizontal trend line, there always is a retest after price has broken it to make sure, because now price knows that this is a level of support. And that's what it does. Price is always moving from one level to the next. It's always moving from support to resistance, from resistance to support. So as it has come up into this area here, it found some support. It's been coming up, and then it decides to come back down to retest its level of support. It found it, it continued to go up, and then maybe again it's going to come down here and may go back up, or it may break, and then once it breaks, now it's no longer support, it's now resistance, or what they call newfound resistance. So before it continues its move, most likely, not all the time, but most of the time, it usually there is some type of a retest of this trend line, and now it says, okay, we're no longer support, it is now resistance, so now the price begins to fall. Okay, so it's very simple, keep it very simple. There's always a respect with the trend line. What you always want to do, you want to find areas where the trend line, as far as in reference to a horizontal trend line, you want to see areas where price has made it support and resistance. So here we have a level of resistance. We have a level of resistance. And we have a level of resistance, right? We know this is a strong area of resistance because price has come into this area at least on 3 occasions and then reacted. Right here, it's a near miss, I'm sorry, level of support. I'm sure if we go back time here, and you always want to look left to get right. So you want to see what's going on from the left side to make sure that what's going on the right side is okay. Okay, so let's look at another trend line here. 1, 2, use my 2 right here, run it through. And you see how price has respected it? This is the first leg, the first impulse leg of the downtrend, right? So it has come back up, it has found a nice level of resistance, and it has come back down. So let's mark this off too. Yep, no resistance there, nice respect. A near miss here. Now again, it doesn't always have to touch the trend line, but when you're drawing your trend lines, that's already there already. When you're drawing your trend lines, you are looking for, like I said, a minimum of 2 taps. 3 taps is good, even more is even better. Okay, so let's look at this. 1, 2, right through. Now, what do we see here? This is what we call a channel. Price moves from support to resistance, and it does so by means of channels. Some people trade channels. Of course, we trade harmonics, but you begin to see that price is moving in a channel. And what I like to do is do something like this. I want to do a nice little analogy, help you understand what is happening, how price actually moves in the market. So what I'm going to do is give you an analogy as to help you understand price and the best time to get into the market. Okay, so let's look at this level of resistance. This is the market high up here. We have a nice level of resistance. We see that price has come to this level, right? And it has respected as resistance, came back down, retested it as resistance, and then continue on a downtrend. on this downtrend. We have a vertical trend line, 1, 2, run it through, and price has found support, then it has found its resistance. And then as you draw your trend lines, you don't have to draw them both, but if you want to draw them as a channel, which is what this looks like, you'll see that price always moves from support to resistance. Comes down, support, resistance, support. And it's just respecting it. As you can see, it's coming down. Now, price moves on tracks, but what's on a track? It's a train. So let's look at price. Let's look at this channel as the train. And where is it going? It's going from one station to the next. What did I say earlier? Price moves from support to resistance, or resistance to support. That's where price is always looking. So what you want to do when drawing your trend lines and your channels not so much, but especially your horizontal trend lines, depending on the time frame which you trade. Right now we're in the H4. You want to draw your major areas of support and resistance, which would be the high, the low, and then there's the in between. Let's say like right around here. There's a midpoint that price comes to. And so this level here, you want to look at it from a principal standpoint. Let's just say this is, I live in New York, so we're going to say 42nd Street. Right? And down here is Broadway. The best time to get on the train is usually not in the middle of the track. And what happens is, because that's when you get caught up into a lot of consolidation, you really don't even know what's going on. The best time to get on the train is where? At the train station. So 42nd Street is the train station, and Broadway is the train station. This is the train. This is the track that it's going as it's picking up more passengers. And once it gets to Broadway, where's it heading? Back up to 42nd Street. And that's what price does. Back and forth. Of course, it does consolidation, sideways moves, but the market only moves in three ways. It moves up, it moves down, and it moves sideways. Once you're able to see how price is moving by using trend lines and channels, you can see the direction that price is going. So if you see a down channel, there really shouldn't be any reason that you're taking buy trades. Your moves, and you can see these large moves are happening on the downside because this is a down channel. And we kind of know, well, not kind of know, you will know what is a great area to take the trade. Because as this 42nd Street is a horizontal train station, a level of resistance, this vertical trend line also is a level of resistance. This too is a train station, and this is a train station as well. So we have 42nd Street, we have Broadway, then we have, let's say, Woodside Avenue here, and then we have 82nd Street here. So you always want to make sure that you're getting in the market at high levels of the highest probability that you're going to make the most pips. Now, there's nothing wrong with taking a trade at 82nd Street and then taking it to Woodside Avenue. It's just going from train station to train station. But again, that's what we call a counter trend trade. You have to be very careful when you're trading against the trend, because sometimes you can manipulate your mind and forget that you're really in a downtrend. And most moves are made in the downtrend, in the direction of the trend. So if you're in a buy and you see this move happening here, a lot of pips if you lose it. It can blow your account. You just lose a lot of money by counter trend trading. So of course, unless you are professional, I wouldn't even try that. So for now, just stick with trading with the trend. Okay, so I hope that helps you out understanding channels and trend lines. Again, we can draw another channel. Let's see. You can start this one from even down here if you want. All right, like I said, I use my wicks. And no, channels don't always look perfect, not at all. You see? So now you can tell you're going from resistance to support, resistance to support, resistance, support. So now you can see clearly the price moves in channels and it's going from one station or another major area of support and resistance and it's doing it on a train. So just look at it from that standpoint. So again, just like with harmonics, it's helping you to see the market differently. You know, forget about what the candles mean, what's going on. Learn to see what the market's doing. The market moves in waves, and these waves can be measured. And with this measurement, you're able to determine where is a good time to get in and to get out of the trade. Okay? So let's see if we can draw another channel here. And the channels that it is inside of channels, there are channels. Just like harmonics, inside of a major harmonic, there is smaller harmonics. So you have this channel here. You have a channel here. As you can see, it's a channel. And what happens is it broke channel. It came back for a retest. Didn't quite touch, but that's what it is. Make it a little larger. It came back for a retest, came back down, and then it started going up. And in the structure video, you see the differences. You understand what market structure is because we have our low here. There was no more lows created if the market started creating higher lows. And this is an indication that price is now changing its trend and going into an uptrend. And since technically this would be our midpoint here. So once this point has broken, it is now a confirmed uptrend. There's other ways you can also determine that you are in an uptrend. Well, this high here is broken as well and retested. And so it confirmed it from this level here as well. But again, as you can see, price moving again in tracks. So here's your major channel. The price is still here. It breaks this channel, creates a higher low, and it starts to go up. And once it breaks this channel here, and you can see, broke it, and see this is here a retest. It has not come back down to actually retest it, but a retest can also be a follow-up candle in the direction of new trend. As you can see, price just kept going up. So just understand that when we're talking about retests of trend lines and so forth, most of the time they do come back down to retest the trend line. Sometimes you see a nice long wick and then goes back up. That's a retest. Sometimes you see price actually come and do something like this here. That's a retest. Sometimes you see price come and actually touch the trend line and then fall, and that's a retest. So there are about 3 different types of retests. So you should know your retest as well. That's basics. I'm not getting into that. But again, understanding these trend lines and these channels. Now, to show you a quick harmonic, we're looking at a bearish crab. X, A, B, 61.8. C, it's an extension pattern. So once it breaks the X, our D point is the 161.8. And you see the price hit and has rejected off of it. But you're wondering, should you get into trade immediately? Very much possible. There's a lot of different ways to get in trade. I think I went into that in a couple of videos. But as you notice with the trend lines and the channels, you can follow it up. And some people, when it comes to harmonics, because prices can play around and do a lot of things up in here, they will not take the trade until price has broken the trend line and retested and then taking it down. Depending on the time frame that you're trading, you could miss some pips doing that. You decide for yourself what type of trader you are, more aggressive, you want to get in once price completes its harmonic, or you want to wait till a trend line is broken and retested, giving you a confirmed sell. And that's what helps you with trend lines and channels, it gives you a confirmation once it's broken and we test it that now things are changing. So there's no guesswork involved. There's no guesswork thinking about, are we still in a downtrend? You can look at the channel and see clearly that you're in an uptrend. If you think you're in a downtrend, there's something wrong with your eyes. Right now, you can clearly see that you're in an uptrend. Understanding market structure, you're making higher highs and higher lows, and you're staying within this channel here. Okay, so it's real simple. I don't want to make the videos long at all, because if you need to go back over them again, it's something short you can do while sitting for an hour, 40 minutes, hour and a half, 2 hours. Some videos people have on that. If you have any questions, you can always hit me up on Facebook, and I'll help you understand a little bit better. If you have any questions as to if the trend line is drawn correctly, some people make sure they just draw a trend line from wick to wick. You know, that's a trend line. 1, 2, run it through. 1, 2, want to do. So you see the channel? It was broken. Now the channel is broken. And so forth. So like I said, there's smaller channels within the larger channel itself. And the key here is, just like with harmonics, it's learning to see the market in a different way. Learning to see it. So once you understand and be able to see the market in this manner, then you'll be able to use your Fibonacci tool and you'll be able to measure the movements. So that's how you're able to see that we have the double bottom here, which gives you indication that something's going on because we have a higher low. So now it's changing direction. You have your impulse leg, you have your B. So you just take your Fibonacci out and you measure it. Where's your B come through, where's your C come through, and then you know where your D projection is. And then you either can take the C to the D, you can wait for D to complete and then take it back down. But there are ways to trade the harmonics, but seeing the market, seeing the harmonics, seeing the direction is what's going to help you in your trading. Some people trade just the channels with themselves. They don't trade harmonics, they don't trade price hacking, whatever. They just wait for price to reach the train station, so to speak. And when it hits the train station, they hop on, whether it's a sell or a buy. They're getting on the train. And then they just take the train on the track until it reaches the next train station, and then reverse it, or wait till it gets back over to the train station in the direction of the trend in which it's going. Okay? So I hope you enjoyed this video. If you have any questions, hit me up. I'll talk to you later. It's first day for harmonic.